Hello everyone and welcome to Options Paycheck Live. Today I will again cover how much I earned from premium last week and what is my performance from the last week. We will look to how I do against index, and we will also cover trades for the next week. As you see on the screen, my premium I collected last week was $979. Since April, I collected over $10,000, and annualized return on investment from premium is 32%. Last week overview of trades. I was selling options on Gamestop, MicroStrategy or Strategy, Groupon, and Google. I collected premium from calls on Gamestop. It was $51. On Strategy, I played quite aggressive puts. So this is actually wrong. So it was puts, and I collected $669. And from Groupon, I collected $21. We will go to the details of strike price, but for Groupon it's quite obvious, right? My purchase price right now is $29.50, which was the strike price for puts. And also I collected premium from calls on Google, and again this was actually puts last week, so it was $236 for puts. Portfolio performance last week was minus 0.88%, and overall since April I made 26% gain. If we compare to index, NASDAQ was performing way better, like 12% better than my portfolio, and this time even S&P 500 is performing a little bit better. And what you can see since April or May in this chart, this is how my portfolio evolved, and you can see that in May, this was actually when I was holding Tesla, and there was big drop in Tesla price. So then actually I dropped below both indexes. Then I recovered against S&P 500, and I was doing better all the time. Then in August, I think it was due to strategy, again drop in strategy, and now again in August 15 or mid-August, it is due to drop in strategy mainly, a little bit of Groupon, but mainly strategy. And also I think if we compare to the index, I think also it's because GameStop is sort of going sideways, but all stocks that I have in my portfolio are quite volatile, and it can be that the same way as I have downsides here, I might have upsides as well, and the chart will be looking dramatically different in the future. We will see. But also what is important to say, or what I think is quite remarkable, is if I was not doing options and I was just holding these stocks, the chart would be looking quite different. The options actually help me to keep the portfolio relative stable, even though when the stocks are going down. My portfolio allocation as of now are approximately 30,000 in GameStop, 36,000 in MicroStrategy, $2,850 in Groupon, a little bit in ClearSign Technologies, Google right now 11,000, and I have 20,000 in cash, and of course a small position in Nvidia as well. If we look at the positions I hold, for strategy I have 100 shares, so I can be selling covered calls. For Gamestop, same 1400 shares, so I can be selling covered calls as well. For Google right now I have 56 shares, and I I will need to decide actually what to do next. I have few things or few ideas in play. Let's see which one I will pick. Then I have Nvidia, but there I cannot be selling options. It's only 16 shares. And for ClearSign Technologies, I have actually orders for quite some time already for $2.50, which is like 5 times more than what is the current price, and it is for February 26, which is not so far away, right? It's like half a year away. It's there already for 2 weeks. I don't know if anyone will want to buy these. Probably not, but I will keep it there because why not? And and yeah, I mean Tesla I got here only for reference and sort of to observe the price. What is it doing? All right, so we can go to the details of last week. Let me just filter for August 15 here. And you can see that I was selling Groupon covered calls with the strike price $29.50. I got premium 23 cents per one share, so 20 including fees I got 21 or 20, almost $22 as a premium, and it would be annualized return from such premiums would be 38%, which is quite good, right? So ideally, or I want to have overall more than 30% annualized return, and so 38% is above the threshold. Of course, it was assigned, but I will go deeper to this, but I'm quite happy actually to have Groupon for this price. I can go to the details. I'm not sure if in this live stream, but I can. I'm planning to create a video that is dedicated for Groupon, and I can go to the details why I went or I invested in Groupon for this strike price. For strategy, the strike price I selected for puts was $395. It was quite high premium, right? $6.70. When I was doing so, the price was 407 or approximately 407. And yeah, so most of my premium last week came from MicroStrategy, $668, and also annualized return from this premium on MicroStrategy would be 85%, which is really good. I mean the premiums there are quite high. For Google, the strike price I picked was $197. Again, quite high return on investment from premium, annualized return on investment 65%, and on GameStop it was I picked 25.50 as a strike price, and it was just low premium, and you can see almost 8.5%. So this is it. This is it for last week. What we can do is we can have a look now on the orders and go to the planning and see what I plan for the next week. So where do we start? Do we start with GameStop? Yes. So we start with GameStop. And I have it also here in the Excel sheet. So let me just filter for August 22nd. All right, so what I'm doing now, I'm planning covered calls for GameStop, 25.50 as a strike price. And let's have a look on the chart, and we will go again through all these things that I want to see actually in the stock, and to protect actually my shares, but also collect the premium, right? So this is the chart. It seems that the support is around $22. Let's see on technicals what are support lines, right? 21.5 support and resistance, 23.19, 24, and then 25.70. What I'm planning is strike price of 25.50. I don't. So right now the price is 22.94. So if I put here 22.94, 15% buffer would be 26.30. So I think I have something like, yeah, probably 11%. It could very well be, I mean, what we should do, we should check actually the option chart. And again, let's have a look on this week, and then let's compare the open interest for the rest of for monthlies and 1 week after. So you can see actually that the open interest this week is not very high. It's nothing exceptional. For monthlies, yeah, even 200 is not really much. 400, which is in January, sounds a little bit more interesting, but also nothing. Yeah, it's not millions, right? But yeah, I mean, in January it will be interesting. For this week, we should not expect really any major movement just because of the options. And if we look at the strike prices, so $23 for calls, then a little bit of gap, right? 23.50. Already this will not cause necessarily really hedging from brokers, because there is quite a big gap. This is low open interest, and then 24 something, then again like gap of $1, and then 25, but nothing exceptional. So as it looks right now, this shouldn't really drive price too high, and even if it goes to 25, then yeah, 25.50 is still quite safe. Max Payne doesn't even show Max Payne, but or it's maybe overlapping actually. Might be overlapping. Yeah, $23 exactly. So it's overlapping with the current price. All right. If we look at the chart, I think it's interesting to see the volume as it's going down and down, right? So there might be actually upside. It might happen. Also, the cycles of GameStop, right? So nobody really can say what will happen. Let's have a look on weekly granularity. Loading. Is it weekly? I think so. Yes. So weekly granularity 12%, 8%. And it's funny with GameStop, right? It's nothing, 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 or only few percent, and then it starts to shoot, right? And how much is this? 22. No, 18 to 22 almost, or 19 to 22, $3. Hmm. I'll I'll keep it right now for 25.50, and I will observe what will happen during the pre-market. And yeah, I mean, we will see. But for now, I'll keep it as it is, to get some premium, and yeah, potentially. I mean, if it starts running, my purchase price is somewhere here, I guess. Um, with all the premium that I collected. This is interesting. Let's have a look actually how much premium I collected on GameStop. And this is especially interesting actually for MicroStrategy, but I'll show you here on GameStop as well, right? So since April, but maybe it's more interesting since when? Since June, right? Since I started to have 1,400 shares, I collected $1,500 on a premium. So basically, from here, when I purchased the majority of shares I own right now, from here, it's moving mostly sideways, and I have the stock, but I collected premium of $1,500, and it essentially means that my purchase price would be, I mean, if my price is something like 22.75, right, and then actually I would collect it 1,500 in the premiums. Actually, what I should do is do something like this, right? So I should try to calculate, multiply by 1,400. So then let's take this minus the premium I collected, and then I can say, well, so this is, let's say this is the money I invested in, divided by 1,400. So it essentially lowered my price by $1 and and a bit, right? And 10 cents. So you can look at it from this perspective as well, right? So it's it's really not necessarily, let's say it's moving sideways, but but the but the price, essentially the price I have is 21.60, and if you look at it this way, it's really, it's not bad, right? And that's why it's really cool to collect premiums, right? So I'm actually right now with the premiums I got since June, my price is essentially, 21.68, and I'm below, I'm with my purchase price, I'm even below whatever price the price was during June, July, and August. So it's a safety zone, let's say, and I'm here positioned for the upside. All right, so I'll keep the orders as they are. It's loading. Let me just click around a little. And all right, so this is for GameStop. Let's have a look on Google. For Google, I planned puts for $202. And what you can see on the chart of Google, I was just drawing how Google, how Google is actually sort of running up in steps, right? So it's sort of stairs what it creates. This is the weekly chart, but I can go to daily chart, and let's have a look. Loading again. So yeah, let's have a look actually on when it's moving up, how it's moving, right? Like sort of the stairs it does. And I can sort of see that this is the distance it does, right, from the low point to high point, and then it pulls back a little. It pulls back maybe like 20% of the growth, or maybe even more, but this is it, right? So this is the time frame. I mean, I not necessarily trying to time the market, which I know is impossible, but what I want to say is basically, in this time frame, it might be that the stock is still going up, but then it pulls back quite significantly, and there is a chance, and this is why it's important actually for me playing puts right now. There's a good chance actually it will go below, below the price that was achieved within this time frame. So for Google, we might be even. I mean, well, I'm not really sure if this is possible for Google, but it's possible, I guess, that the price might go again somewhere towards 190, or or something like this, right? So it could pull back to this zone. Don't know. The fundamentals are quite strong, right? So Google is doing quite well, and I can totally see why people would be investing in Google it seems that it's very well positioned in the AI play, and I believe the market is recognizing it now. What you can see here with the yellow line is when I sold the shares with the covered calls, and then last week, yes, I was doing 197.50. Obviously it went a little bit up, and so now I can chase again with 200, 250. Actually, the premium is enough so that I'm not really like losing any value if I get it with this price, but also I'm not necessarily um, I I would not it's just sort of not really earning any money from premiums, right? It would be it would just zero out. So yeah, so this is what the strike price I'm aiming for. Maybe let's have a look on the weeks, if potentially it has might have some clues whether this is so it looks. Could it pull back? Well, I don't know. I don't know. It's second week. It is slowly reaching the overbought territory. So maybe one more week, and then it will go. I think once it reaches the overbought territory on the weekly chart, then there is a good chance actually that it will start to pull back. Well, but maybe not. You can see it's difficult to say, right? So there are some indicators that might say, well, this will pull back, but you never know. You never know. So what I'm playing right now is really waiting for Google to pull back a little, and then purchase the stocks. As of now, I'm just chasing the price with the premiums, and basically the return I'm getting is almost like I wouldn't sell the shares. So that's what I have for Google. I must say that actually I'm still considering also stepping into Groupon, because I think Groupon. Let's have a look on the market capitalization. It's 1.1 billion. It seems that Groupon might be growing like 10% yearly, and the free cash flow per year might be around 100 million. Very low multiple would be 10, so then it would be around this market capitalization. But also market capitalization could be somewhere between 10 and 20. If it's 20, then the price is double, right? Or market capitalization is supposed to be double, then of course the price is double. If it's if multiple is 15, then we would be one and a half billion, and so it is like 15% or 50% up. What the analysts are saying is that there is upside of 34%, and honestly, I I think this really can go more up in the future. I don't know how fast. It's I'm quite convinced about Groupon fundamentals. The management is really doing wonderful job. What they did since what they did since 2 years. Let me actually show this chart fully. Right. In May 23, the price was around $3. Then the transformation started, and you can see here the transformation valley, right? So the price was going towards 19 and then 9. So it was really volatile. It was 50% down and up, and the market was basically hyped about the transformation and then disappointed about how slow it goes. So this was maybe, yeah, this was really low, right? 790. But at this point already they generated a positive free cash flow, and it wasn't really there wasn't really a chance that Groupon would go bust. And then since 2 or 3 earnings, the transformation seems to be completed, and they are just positioned on on the path forward with growth. What they are doing, and I think this is quite interesting actually, because with AI and use of AI, um, a lot of companies like Facebook, but also Google, right? Whatever platform that has content or that is selling advertising and so on is really making more money, because AI can actually deliver better results in these areas, can deliver more, maybe more personalized content and more attractive content. And I think Groupon actually is in this space. So they have platform, and they sell they sell services or products with personalized ads, right? Let's say. And also they, because it's digital space, right? Digital product, they can actually benefit from use of AI for development. It might help them to be more productive, and also they will benefit actually from being a platform, and so sort of doing advertisement with AI, right? So this all position Groupon very well for the future, and I don't think this is actually the last thing we will see from Groupon. I think they are really back. They have strong brand. They are back, and they will be very very strong. As I said, I'll try to do video just specifically for Groupon. I think it's super interesting, and we might be just starting. So right now this seems to be good position actually to enter Groupon. Um, Potentially this might be really bottom. Could be that the price will still be going down a little, but not, well, I cannot say much, not much. I don't know. Anything is possible on the market, right? But let's see. So support around 28. Well, it's maybe $0.50 less than what the current price is, and then 25 and 17. I mean, this would be for 17 and even 25. This would be like super bargain, right? Because let's assume they will have 100 million free cash flow this year, and then multiple of 10 for free cash flow, which is quite low, would be just the current market capitalization, and for $25 it would be even below. So yeah, I mean, let's see, but might be volatile, but I think there is a lot of opportunity for the upside. So in context of what I was saying for Google, I might actually consider before the market actually opens, I might consider to cancel the puts for Google, and I either do puts on Groupon, or I do buy Groupon directly and then sell calls. Actually, let's have a look on options, and we can calculate what is more and we can calculate what is more profitable. What's going on? Option chains. I mean, everything should be enabled. Strange. What about for Google? Would I have the same problems? Yeah, for some reason. Okay. Maybe it's working only when the market is open. I think here I have also, I can check options as well, right? So August 22nd, and let's say I would be, yeah, but then what puts, right? 29, 29.50. Is it really just $1.05? It's weird. I would expect this to be higher. So this, yeah, right. So this is all right. So then the price would be $28 actually. It's, but hold on. Yeah, all right. Yeah, okay. For 28.50. The prices. Yeah, all right. No, but I would be, let's say I would be buying 29.50. So what would be actually a total investment? Let's say, and I have here somewhere this table which helps me. Where are the, all right, so let's say Groupon put premium was what, 90 cents, strike price was 29, it was 29, no, it was 29.50, delta, I don't know, but yeah, this is nice. If I go for 28.50 and then I think it was 0.5, it's very nice as well. I mean, it's great actually. 91% is great. The question is what to expect actually from Groupon. Let's have a look how option chart looks like, if there is any unusual activity with options. I mean, it's not the only indicator, but okay. Yeah, for this week, nothing spectacular. And 25,000 overall. Yeah, well, this is nothing. This is nothing really like spectacular. I don't think like in such low open interest, even the Max Payne. Yeah, well, but anyway, the market participants, yeah, this is how they position the options. They see actually, yeah, the market sees the price should be somewhere higher. All right. All right. So let's go again to stocks, Groupon. So it closed the gap, and now it would be good to see actually some reversal. The volume actually of selling is going down, so there is less and less interest in selling. So yeah, I mean, I don't know. I sleep over it. Basically, the decision or the reason why I'm thinking about it is it like what will grow faster, right? Groupon or Google. Um, is Groupon going to be to go sideways? Is Google to continue growing? Well, if Groupon starts, if Groupon stops dipping, then it will be much faster, right? It will be much faster. So I might actually buy more for 28. Let's see what the pre-market will say. But I might buy more and then start selling covered calls. Okay, let's sleep over it. MicroStrategy. I have 100 shares and I am planning to sell calls with the strike price of $400. And again, let's talk first about when I entered the position, when I opened the position, and what it means, because I opened the position at the price of $425. I was selling puts, right, starting from here, and then there was like this massive drop, and so it got assigned. Then it continued dropping, but as I was able to sell the the options, collect the premium, and as I was able to roll the options quite often, right? So you see, I was rolling the options, the calls, as the price was dropping. Then overall, I collected $3,000 on premium, and so the logic is basically I invested $42,500, but I collected 3,000 premium. So again, my investment right now is like if I invested 39,000 $39,500, and if we look at the chart, so basically this was my original entrance, right? So now let me just copy this. Is it possible to copy or not? I don't know. For some reason it doesn't work very well. Clone. Maybe there is too many lines. It's also possible. Or maybe let me just reload the page. It might help as well. Oh, okay. So now it's copied over. So this was the original entrance, right? And then 3950. So my original entrance to MicroStrategy was $425 while I was selling puts. Then, since then, it was in July, on July 7th or July 11th, the puts were assigned. Since then, I was selling covered calls, I've been rolling them. I was also selling cash secured puts when the calls were assigned, and I earned $3,000 on premium. Let's have a look on it this way. $42,500 was my initial investment with the price of $425, right? So this was my entrance. Since then, since July, which is 1 month and a half approximately, I got $3,000. You can deduct it from the investment. So now my purchase price can be looked at as $39,500. This is my entrance level or price level after all the premium I collected. So right now I'm still a little bit above the price, but this might be the support level. Maybe not, maybe yes, I don't know. The volume actually of selling is going a little bit higher, but let's see for how long it will last. It might also reverse. And if I'm collecting the premium and the price is going down, I will be lowering my entrance or purchase price basically, and then I'll be positioned for the upside. What I'm doing for this week, I'm selling covered calls with the price of $400. I might adjust based on the pre-market. So $400 is somewhere here. So it's slightly above my entrance right now. I would be earning $500 basically just on the difference of prices, which is not much, but I would get also something on the premium. So the premium would be 235, or after fees a little bit less, which is okay. And so overall, I would earn 700 from this initial investment, which is not really much. This is not this is not the investment I'm really looking for, but it's possible actually to lower the purchase price with with selling premiums, even if the stock is going sideways or down. The options premium can actually help you to recover from that, and then you are positioned from for the upside. Let's see 366. The problem is I don't see the data here in interactive brokers on the web, but let me open. Yeah, well, it will disconnect me if I open it on the phone. But I think $400 is 0.01 delta or 10% delta, which is quite nice, which is quite safe. And also, if the price is right now 366, yeah, all right. So actually the buffer is not very high, right? So what is this thing doing typically? Like what the weeks are looking like? 16%. Yeah, all right. So this can be massive, right? 7%, then 7% and 7.5%. This, yeah, I mean, of course, it's volatile. It's really volatile, and that's why the premium is so juicy. What I could do is maybe actually go for higher premium. Higher premium, higher price actually, and I think I'll do this. I'll probably go for 415. What is like 15%? 420. I might go for. Actually, I'll change it. I'll go for 415 or 420. The premium at the beginning will be lower, but then depending on what it will be doing, I might be selling. I might be rolling, right? So if it's going down or sideways, I might be actually rolling down, and we would see. Also, assuming this is support and the price will go up, I might wait on Monday till the price goes up a little, and then just collect the premium, higher premium for the same strike price. So what I could do is potentially set the strike price of 415, 420, and say premium I want to collect is 235, and just wait a little um, for the price to go up and collect premium. If the price is going up, right? It might not happen. Let's see if there is some unusual activity for this month. It's quite a few, mostly puts. So people are expecting the price to go down. Well, so this is where people are hedging, right? Or call opening, either hedging or just expecting the price to go down and enter at a lower price. Or not necessarily enter at a lower price, but I mean, what it does at this strike price, it will behave almost the same as the stock, right? So $1 drop in the price would be almost $1 drop in the options. So then it's like leveraged shares to have. But yeah, I mean, this looks like people are more expecting actually to the price to go down. Could be, but max pain is at 400. It's interesting. It's interesting. I don't know. I would like the price to go up. I think there is there is a good chance actually it will go up, but there is a good chance also it will go down. The chart doesn't look, I mean, it doesn't look necessarily so bad because of the support here. Okay. What next? Groupon we covered, MicroStrategy we covered, Google we covered, GameStop we covered as well. So yeah, this is it. What is Bitcoin doing? All right, moving sideways. Yeah. Interesting chart. I think what is interesting now is NASDAQ, right? So like to see all the tech companies and what it might be doing. Again, I've been trying to put here the time frames, how it's moving. It might be set for a little pullback. I wouldn't be surprised. This weekly chart, how does it look on daily? Is it oversold? Might be. Yeah, it was for quite a bit. Going down a little and up again. Might be running a little up still, but yeah. I guess it's due for some pullback. 23. It's not much really. All right. So this is what I'm planning for next week. As I was saying, Groupon and Google, I might I might need to reconsider MicroStrategy again. Like this is, let me just put different colors here because this is what I need to reconsider before market opens next week or tomorrow. All right, good guys, thanks for watching, and see you next week during my planning session again. Cheers.